Good morning, everyone. Welcome to a new update of me, Michael van der Poppen, also known as Crypto Michael. The day after we've reached a new all-time high, or for the salty people, we came close to a new all-time high. Main primary point is that we are in the region of a new all-time high, and Bitcoin is still not dead. It's even more alive than what it used to be. So it's great for everyone. It's great for all the investors. It's great for the perspectives of Bitcoin and crypto. And I think we're going to have some crazy years to come. So congrats for everyone after those 3 years that we are getting in this region. But we are going to discuss some TA, as you know, that we're discussing every day. Before we continue, I would love to say check out my Instagram. I'm going to introduce some stuff on Instagram soon as well, which could be live sessions in which we are discussing some questions that you can ask me on Instagram. Also, please subscribe to the channel, through which we can continue building this platform to a new level. What can we see on Bitcoin at this point? Well, in general, the fear and greed index is reaching 95 today. So the overall greed is still heavy in the markets, which indicates that it's still not a real entry point. However, we can continue chopping around for a few weeks in this region, which might mean that altcoins have a relief ready, or at least the small caps and the mid caps could have a relief ready before the final test. In that perspective, I wanted to share my view regarding the DXY. We have been discussing the DXY yesterday on the live stream, and we see that we've broken below the range. And the range in general we can establish here between 94 points and 92 points. And now we've lost the range low, which is bullish for Bitcoin in general, which is not bullish for gold. But gold has several other reasons why it's dropping down. Break above the range high. Oh, apologies. Break above the range high, fake out, break above the range high, fake out. What we want to see in the DXY is that it continues to fall down, right? That is going to suit the momentum on Bitcoin fairly well. However, if the DXY bounces back up, which means that we break back into 92.15, if we flip this level back in, I think we're going to consolidate with Bitcoin. So this is a trigger that you should be watching. It's quite similar to the euro dollar. The euro dollar, the level that I've marked previously, is indeed the level that we bounced from. That's fine. If we break back below 1.19, I would consider that we're going to test the lows again. And then I think we're going to have a further correction on gold and silver, and also a correction on cryptocurrency. So this is something that you should be watching if you want to navigate into the markets. Higher time frame view on Bitcoin in general is still the same, right? I got a bit surprised with this overall momentum towards the new all-time high, which is obviously great. But the overall view is that you should be watching the higher time frames, in which we can say that we are at all-time highs, and given this overall surge, we are not close to an entry point. The entry points are still defined through daily levels, which is the 16K barrier here, and which is the 14K barrier here. What do we need to watch? Well, we've got the highest monthly close. The tweet that I posted yesterday is quite sarcastic, but it got 500 likes, which is great. The level to watch is the area around 19K. This is the weekly level around 19K, and now my trading view is not working properly. That is something to watch. If we are going to close beneath and we're going to lose these blocks as well, I think we're going to have a further correction down, and we're going to test those lower levels. Daily time frame, the similar area is marked here. Previous range high area is around 19K, so that should be holding in order to sustain the momentum. Otherwise, we might be getting a fake out construction like we do here. Then we get towards the 4-hour time frame. We do see a breakout above the range high, right? And we see that this 18.8k level is a crucial market. It's also the market that we lost previously, indicating that we started the chain reaction downwards. So that's why we are watching it here. If we break below 19.3, I think we're going to have that test around 18.7, 18.8, and then the question is how we're going to bounce. So the levels that we should be watching on Bitcoin at this point, that's actually defined through those levels, which is this area here. If that is lost, I think we're going to test the range lows in the further period, but it can take some time. I mean, if we go back in history, we can see that those sideways action takes time before the compression is there, before a clear picture is there for continuation. At this point, we're still above 18.8. If we're going to chop for like 1 or 2 weeks, I think altcoins will have some relief again on it. So yeah, it's all still debatable where we are heading. If we do hold this range around 18.8, which was the crucial trigger previously too, I think we're going to continue with the upwards momentum. But overall, it's quite tricky if you want to enter longs. Breaking this all-time high the way it did is not an entry point for me. If we do lose this 18.8 point, I think we're going to have a correction. And I think we're going to have a correction across the markets. So I will just use a chart that actually is clean. Ethereum, everything on the markets you can actually discuss that there is a range low and there is a range high. So between those two levels you can state, okay, we've got this range low support area, which is the retest of the previous range high, and we've got the resistance area, which is the previous high. Likelihood for ETH to take this liquidity and jump back down is significantly there, but this is definitely not an entry point. Don't buy when there is FOMO, buy when there is fear of losing money in the fact of that it's only dropping further down, and when people are only expecting further downwards drops to occur. So when everything starts to crash, also do not start selling within this crash. You should be scaling out already and look for confirmations of a trend reversal. So in the run up, you are starting to scale out at the point that it's starting to be extended and overextended. When it starts to drop heavily, you should not be panic selling during the drop, but you should be considering buying on higher time frame levels. What is the crucial breaker for ETH? Well, we do see it here. If we do run up, the crucial breaker moves towards 606. But at this point, if we hold above 493, everything is fine for ETH. If we do break below 593, I think we're going to look at this range here. Then finally, we have the CME gap futures on the CME chart. This gap is still there. Given that we've got it overnight and this gap is significantly large, the likelihood of this one closing is there. But it's also being surrounded by the fact that we frequently build those ranges before we start to accelerate. So the primary question that you probably have is, are we going to see 14k? That is essentially all depending on how the dollar is going to act and how the 16k level is going to act. If we reverse, which is a likely case, and we're getting towards the 17k zone, the question is how we're going to bounce and how demand is stepping in around those regions. If we're going to see significant buys stepping in, the likelihood of continuously higher lows, so then we make the higher low at 17k and we just start to build the range before we continue. And this breakout is most likely going to be the Altseason trigger that I've been discussing the past months. Then we're going to have a copy paste of this. So if we make that higher low, this is the scenario that we have. However, the other scenario that we have is this one, in which we make another breaker and then we start a rally. Either way, those dips are for buying. And that's the end conclusion of this video. I'll be back tomorrow with some new content and I'll probably be live tonight at Cointelegraph YouTube. Take care.